that are on recording in progress. Just so you know, we are recording. This is Thompson Wealth Management. For those that are new, we are a financial planning firm, and our president and CEO, George Thompson, is on and will be our host. I want to introduce myself. I'm Danette Wilkerson, and I am to George.
Co-host.
I'm the co-host. All of us are co-hosts. This is a lounge. We in here chilling. We in here chilling. So we're all hosting, if that's a thing. We're just in the lounge. Do y'all have your coffee? Everybody got their coffee? You had your breakfast? No? Okay, well, we are in the lounge. We're going to talk investments. We're going to talk state of the markets today. Some of us are going to communicate, and we're going to pick on some folk to answer some questions and see how you're doing. But it's interactive, okay? Normally we do a presentation and you guys sit and listen attentively, and you can raise your hand and ask questions. Today it's kind of round robin, okay? We just want to have some conversation so that we can get this year started. Can you believe it's already 2024 and it's February? This is crazy. I'm going to kick it over to the host and let him introduce the entire team and anybody else he wants to pull into the conversation. So don't be shy if he pulls you in, okay? Don't be shy. Unmute.
All right. Hey, family, how are you doing? George, hey, I just want to let everybody know I'm excited about 2024, 2023. We had classes, we taught and did everything, and now we're changing our format a little bit, as Danette said, Investment Lounge, because I'm letting you guys know up front. I'm excited about it because this is more moving it back to how it was live. If you guys ever went to seminars when I did them live, I stood up at Corporate Point or Faithful Central Bob, wherever I was, or wherever, for many of you who are around the country, and you can interact with me. So we're going to do that today, and we're doing that format. So just feel free, if you have a question, you guys can just raise your hand and then we'll answer it. But then there's also some people that hey, I'm letting you know up front, just may pick on you, not pick on you, but just ask you a question, because you see what happens is that one of the things when you teach people finances, it's one thing to have knowledge. That means know-how. Wisdom is experience knowledge, so you practically walk through it. And that's one of the differences you have here, is that we walk through it with you, as many of you know that are clients on the line. And then other people that aren't, then we can also just give you a little bit more information about how you can get started with us. But hey, let me go around, and as you already just met, Danette, she's the vice president of everything, operations, sales, marketing, and everything. In that area. And then I'm just going by who's closest to me and everything like that. We have Shayna right next to, she's like this to me. Shayna right there, she's our operation, but then also advisor, helps in all those areas as well. And then we say air traffic control. We have Julianne that's on as well. And then also they specialize in different areas, and she also helps in the estate planning area, just as Shayna helps in the budget area, in that area, and just in the finances, and then walking through things as well. So that's the team. And then also Crystal Moselle, who's working on a project right now at the church. She also helps me. She's a dual employee, works at Faithful Central, but then also helps us in the tax area. The reason why I bring that up is that's our next investment lounge, and in those areas. And then I believe she may be coming on a little bit later on, but that's for next time, and then we'll be covering that. All right, but hey, everybody, I'd like to get started. How I get started every time is I open up in prayer. If that's all right, you can just give me a thumbs up in the chat, but it don't matter if you do thumbs up or not. We're still going to pray. Let's pray. Let's bow our heads. Heavenly Father, Lord, we come thanking you and praising you. And as you ushered us into 2024, we say thank you. Thank you for all the blessings that you bless us with. Lord, first of all, you bless us with time, your tender mercies. Every day, Lord, you bless us. Lord, the talent, the skill that you give us, Lord. Thank you for that, Lord. And then the temple our bodies from the top of our heads to the tips of our toes, Lord. We thank you. And then treasure our finances, Lord. Lord, we pray over what we do with our finances, pleasing in your sight. Thank you for blessing us with resources, jobs, incomes, opportunities, businesses, Lord, witty ideas, Lord, how you bless us, Lord. I pray that we not only utilize them, but Lord, we be the people you'd have us to be, loving people, caring people, and sharing people. Lord, we say this prayer in the name of Jesus, and all the people of God said, amen. All right, everybody. let's go ahead and get started. So, hey, I'm just going to pop up here just a little bit. I'm not going to show a whole bunch but what we want to do is we're just going to talk a little bit about what's going on with the markets and just different areas. And then also, just Danette, how's the screen? Is the show on screen?
It looks gorgeous, if I do
Perfect.
say
Okay,
so.
cool. So, hey, everybody, let's pop this up. We're going to talk about what happened a little bit in the markets and everything like that. And I'm just going to walk through it a little bit with you and everything like that. Then, as you know, just some real quick housekeeping things. Just you guys know that I'm an investment advisor and I may bring up some stocks or investments, and they're just purely illustrations. I'm not giving specific advice and different things like that. And if you could please be muted and everything like that, I would appreciate it. And we'd all appreciate it. And then we also welcome questions. And in doing that, so I just want to just pop up an agenda real quick. We'll talk a little bit about stocks, what happened in 2023, and then performance in 2000, and also just kind of talk a little bit about what happened, and then where we're at now, and then just talk about some things that we want to look at in 2023 that we looked at. But what I really want to talk about is things that we're looking at in 2024. And then I just want to have some different questions. Vernell, where's Vernell? Vernell. Let me know when you come on. Vernell. I'm going to ask you a question, but you're muted. So then
Yes,
I'm going to come back to you a little bit. Hey, how you doing?
I'm well, and yourself?
Good. Hey, in a minute, I'm going to ask you just a little bit about how 2023 was for you. And then Crystal has joined us. Crystal, wave your hands at us. Crystal, she'll also be doing that in that area. So I'm going to ask a question. Then I'm going to come back to you, Gail, and talk to you. And Gail, because you were on and Danette said you look all chipper, we're going to ask you a question about 2023. But before I do ask you guys a question, I just want to just kind of put this out here. If you guys went to last year's presentation, when I did what was happening in 2023, I asked everybody to hold up 3 fingers. Can everybody hold up 3 fingers? And what I said there were 3 things that were challenges that we were working on. Does everybody remember number 1? Type in the chat and I'll give you guys extra credit. Okay. Number 1, I said we had inflation issues. Everybody, we had inflation. Gas was high. In different areas where you were just traveling around and everything like that. But I traveled around to different areas and gas is not high like it was before. And then I said the second challenge that we had was interest rates. And the Federal Reserve had raised interest rates, if you remember the previous year, 7 times, 4 times last year in 2023. So that affects certain areas. And the third thing I said last year, not this, earlier last year, the year before, was I said the war in Ukraine, but then, things have changed. So now we're going to talk about some headwinds and just different things about 2023 to 2024. So Vernell, let's start with you. Okay. How was your 2023 investment wise, or just kind of like different things that you kind of how you saw it?
It started off rocky, but as 2023 progressed, there was a shift, both in the markets, I think also in just in sentiment as well. You mentioned inflation and interest rates.
Right.
That affected me from a real estate investment standpoint because the markets could have been at a standstill, but stocks dipped as well. But as the country became more optimistic about the economy, the stocks, have rebounded. So
Gotcha. Hey, can we stop slow? I'm not shutting up, you guys. This is the beauty of the lounge. So real quick, everybody, you see what he's saying and what we're saying? Did you guys see how he said inflation? Everybody just can raise your hand if you're affected. You see inflation that you remember at the beginning of last year. You saw how prices were higher. You saw how things were going like that. And then that affects consumer sentiment because people aren't either investing as much or they don't feel like they have as much money. Mm-hmm. You see, like I'm trying to read into what he's saying. Like, do you know why you don't feel like you have as much money, Virginia? The reason why you don't feel like you have as much money is when you go to the grocery store and you put $50 worth of stuff in the grocery bag and it's not full. Don't you feel like, do you guys feel like when you go to the grocery store, you don't have as much money? You ever notice they're playing louder music? Anybody notice that in the grocery store now? They're trying to get the little club scenes. So you can get so you can maybe shop more, right? Do you guys understand that? Okay. That's what I meant by sediment. Okay, gotcha. Hey, some more people are joining, so I lost you on the screen. But then you want to say real estate wise. Can you delve a little bit deeper, Vernell, what you meant by real estate wise? Why is that? You guys understand? We're going to have this, and then I'm going to have Danette respond to this. Why was real estate it affect you last year?
Because I didn't buy when I should have, and the rates were low, and then they skyrocketed. So the higher the interest rate, obviously, that's more interest you're going to pay, on your loan, which means you need to have a larger, down payment. And a lot of investors or potential investors like myself were priced out of the market because the demand was high, but the supply was low because the owners of the properties weren't selling because they didn't want to enter into a market where they bought their house for, let's say, 2% interest or 3% interest, or even a little higher than that, but then have to turn around and go back into the market with a 8 or 7% interest that they have to get a loan for. So the owners weren't selling and buyers, couldn't buy. So the market kind of went at a standstill. So that really affected the market from a real estate perspective. It kind of jammed us on both ends. Right. And so, that's why everybody's hoping that's why everybody rejoices when the Fed said this year they were going to drop interest rates, 3 times.
Hold on, we're not talking about this year yet. We're talking about last year.
Okay, I'm sorry, but I'm saying that's why people got excited. That's why people got excited towards the end of last year. You know what I mean?
Right, and it creates a sentiment.
Yep,
that's really good. Hey, sorry, we're going out of order. Gail, I'm coming to you in a minute, but Deborah, Burnett Brown, just you see that in real estate, right? That the markets have slowed down, or we're talking about, do you guys understand? We're talking about a constriction in the market because there's something called supply and demand, right? So we have very low inventories, right? So that, and then now people are less likely to sell a home because if you're paying 3% interest, why would you sell your home and then come back in and get one at 6 or 7 or 8, right? So that creates an issue. What are you seeing in the real estate market, Deborah?
Absolutely, that's the case. There are a lot of people that are not wanting to move because they're saying, where will I go? Yeah. And, the interest rates are just too high for them because many of them have refinanced. So they're in a good position with where they are. So they don't want to move.
Right. And I want to quote statistics, but over 50%, they're saying in certain markets, people have 3% loans. So if 50, 60%, if a large number of people, so I don't want to quote exact numbers, but I remember them and I had them, but if there's a large percentage of people that have 3% interest loans, they're not going to sell. Because why would they sell that? Because let's say they have a $700,000 loan, and then sorry, people that aren't in California, but that's kind of what loans kind of are. So let's say someone's paying $3,500 a month at 3%. Do you understand? If they're paying at 6 and 7, they're paying almost 6,000 or 7,000. So then they have that much less spending. So then you understand they're having family members move in. That's constricting the markets. Third thing is that people that are older, I didn't say older. I did not say older. More mature. Did I say more mature? Did you guys know over 10,000? Now it's 12,000 people turn 65 a day. You know what I mean, in the United States. So you understand. They're less likely to, remember before people used to downsize and right size and everything like this? They're right now saying, I can't find a place that I like that's in that area. So I'm just going to hold on to mine. So you understand that's the same thing as people not retiring from their job. So then that makes less jobs available for new people, right? And then automation. So then you see that's why the job market's tight. So these are reasons why we later on want to go to what do we do because of that. Those will be during our solution time in doing that. Vernell, I want you to finish your thought, and then I'm going to ask Gail how she did. All right? Did you finish it? Were you done for the moment?
Yeah, I was done.
Cool. Done. Gail, looking all chipper and everything like this. How was it? Just 2023, just how you kind of saw the different things we just said as far as interest rates, as far as that you saw with interest rates, inflation, and then well, the area of prayer was war in Ukraine and things like that. But anything else that you wanted to I'm sorry. So how did you see things?
Well, one of the key things, we did not get a chance to do the refi when everything was very low, when the interest rates were very low. So we were not moving into a refinancing, obviously, during that time, during all of last year, because we saw the rates were just going to keep going up. So we stuck with our current mortgage rate is still what it was way back when,
Gotcha.
but not
And by
as
the way,
low as it had
you don't
gone.
have to tell us that rate. Just
Oh,
want to do
I'm
that.
not.
Oh, okay. All right. Hey, everybody. Also, one more time. When we're doing things, we're doing for illustrative purposes so that you can learn from them. So we're
Yeah.
doing. Okay. So if we are interviewing you, I'm not asking you, please don't say your social security number, your, interest rate or, thing like that. I'm just asking you to do these and so that you understand that. Because this, I just want to say something because it's our first one. I'm doing this. Do you understand now because interest rates are higher, it's like we do things differently. When you sail, that when the winds shift, you got to change and you make certain changes. And that's one of the reasons why you deal with you work with someone that's a complete, that does total wealth management, because we manage in all these areas. So when the interest rates are high, we do this. When interest rates are low, we do this. When we do this thing, and then we go into stocks, real estate, businesses. There's certain things that you do during these times so that you come out ahead and you get to the next level. Gail, I'm sorry. You were going to say interest rates. You did
No
not.
worries.
At
Yeah.
a certain time, and now and I told you not to yell out the interest rate, and now you just so go ahead, pick it up from there.
Well, the advantage is, it allowed us to stay where we were because our interest rate is still better than what it would be if we were to even attempt to refinance now or to consider buying something else. So it kept us at a stable point, which is good for where we are right now. You could see the inflation. I mean, with the gas, et cetera, it was high for a while, much more comfortable now. So our spending power has increased a bit because inflation has stabilized a little bit more and interest rates have stabilized. They haven't gone back down, but they've stabilized. So, we're in a pretty decent position right now.
Right. So what you said about, I was going to jump on that, which is spending power. It's so funny. 2 weeks ago, I was in Minneapolis, Minnesota, and then I just got back from Atlanta yesterday. So just traveling with the financial fast. I was meeting with financial advisors, and then Minnesota. I was doing that. But so you guys know what's funny when you come from LA, everybody, we almost have like a chip on your shoulder when you go to car rental places. They threaten you with fake threats. Like I'm in Minnesota, right? And the lady goes, "Are you going to bring the car back full, or are you going to bring it back empty?" I said, "I'll fill it up on my own." She goes, "You make sure you do. If you don't fill up, we're going to charge you $3.29 a gallon." When you fly all night, you're in LA, and you drive to the airport and you see $5.29, $4 and that. When you get off these planes, now you guys know I'm coming to Atlanta next. So anyway, and they threaten you with $3.24. I was like, "This, ma'am, $3.24." I said, "I'll take it." Like, "Where do you live?" Then she saw my California driver's license. She's like, "You think 320 is low?" I was like, yeah. Then I'm driving to my dad's house in Minnesota. Gas in Minnesota, you guys, is $2.80 something.
Two.
Right.
Mm-hmm.
So it's that. So wait. Do you guys see that? The purchasing power in certain states. Do you see that? There's people on this call right now that live in different states that are probably surprised by some of these things. So Atlanta was like the same thing. But even I didn't have a rental car there. But you guys understand that. So she brought up a great point, which is purchasing power in doing that. So now that we talked about purchasing power, now I just want to segue a little bit into how the markets performed and everything like that. So you guys see like how, so that was the real estate market, but then also we have to look at how the stock market performed. If you looked at the beginning of the year, remember we were bumpy. We talked about that. Very bumpy, you know what I mean? Like just from the interest rates rising. And if you remember last year, and actually the year before, there was 4 times where they raised interest rates 0.75. They just were raising 25 basis points. So everybody know that 4 basis points equal 1%. So you're seeing that. So when they raise interest rates, do you guys remember interest rates and bond prices have an inverse relationship? That means when they raise interest rates, that means bond prices go down. That's why on your statements, you'll see where it looks like you lost money or your value went down, but you're still collecting interest. So now what you're seeing is interest rates stay the same. The Fed isn't raising interest rates. And then we're going to talk about later on that they're talking about actually lowering interest rates. But last year in the markets, you saw the people talking about, hey, what's the S&P 500 going to do? That's the 500 largest companies. And actually you saw where where you actually see where the Federal Reserve raised, where you saw them lower, they raise interest rates, but then you see where this year they're talking about lowering them. So you also saw last year, if you remember, also that we talked about, was that banks had problems. You guys saw those bank failures, issues like that with banks and things like that. Those happened, but the markets actually ended up last year quite a bit, and also in those areas. So you guys saw that's the advantage of being diversified. So also 401, just retirement wise, investment wise. Hey, let's see where Miss Dyson came on. Tamika,
Good morning.
hey, how are you doing?
I'm good. I might have Nola May barking in the background, but
No problem.
if that happens, I will mute immediately.
No problem. Just wanted to see just kind of a little bit your feelings a little bit about the markets as far as just investment wise, different things like that, how you felt about that and everything like that.
To be quite honest with you, I see a lot of things going up and down, and what I'm trying to keep reminding myself is just stay still, right? Don't make any like quick moves without just getting more information. And everything has a cycle to it. So that's where I am right now. So,
Okay.
just to be honest. So I
Good.
see a lot of stuff, but I can't sit here and say that I know what everything means, because then why am I here?
There you go. So hey, can I just say this to you guys? And by the way, I just want to let everybody know something. She is not a paid actress. Did I ask you to say that exactly that way? I did not.
Absolutely not.
No. All right, gotcha. So you guys, the markets are up and down. That's why we actually have this call. So Tamika, everything you said, this was absolutely perfect. So I just want to show you guys something about up and down and kind of how we look at it. I just want to give you an illustration of that real quick. So do you guys see the slide in front of me? Danette, how are we doing? Do you see this right here?
Got it.
This is the S&P 500. That means the Standard & Poor's 500 largest companies: Apple, Google, Amazon, Tesla. You name the 500 stuff you use every day. Toilet paper towels, Tide, Clorox, Costco. Anyway, I'm not gonna name all 500. So look, do you guys see what happened? So do you guys see the up and down? Hopefully you can see my little cursor. See how the market was going up in January and February? Now this is the same thing Tamika's saying, same thing Vernell's saying. The Fed raised interest rates 25 basis points. The economy's speeding up. They want to slow it down. Boom. They see this? They're using this. And then look, after inflation hits a 2-year low, then what they do is look, they raise interest rates again. The markets still go up. See here? They do this. Then people start seeing a Fed cut, that the Fed's about to cut interest rates. So do you see here where the markets were coming up from last year and the different areas and everything like that? So that you're seeing, but see, look, this is where it started. So then this is where it ended. Okay. So you see that, if you look at that almost, and the rates are, and the rates of return, them coming up, ballpark in the 10%, in that area. So you're seeing them rise. So now, do you see here when the markets fluctuate like this, these create opportunities that you want to invest in these areas? All right, that makes sense, everybody? So what you're seeing the market go up and down, but you understand it's going up, down once, up, down once. You see like where you're seeing where it's higher than before. So do you understand that there's a risk of not investing, right? That means that you aren't participating in the market, that you're missing upsides. So you have to understand that. That's why it's so important. I'm going to close with this, but it's so important that you have an investment strategy and that you stick with it. One of the, I love, anybody here like Home Depot? I love Home Depot. But one of the mistakes that people make is that there's these TV channels that show DIY where people fix up the homes themselves. And then they want to go and then they go do that and they buy equipment. And then they say, I'm going to go, you know what they say? Wayne, you know what they say? Honey, I'm going to go out and I'm going to go in this bathroom and I'm going to light it up. I'm going to do the floor and I'm going to do everything. I done watched HGTV for 4 consecutive hours. They go down to Home Depot and they buy all this stuff. Then you go home and you find out it's much harder than you thought it was. And then you bought some stuff that was on sale or cheap, or maybe you bought it and wasn't what you really wanted. And it didn't look the way you want. Then you tear the whole thing out and hire professionals come in and do it the way you want it. And you had to pay twice. Why am I talking about Home Depot? A lot of people do that with their investments. They try to do it themselves and then they bang around. And then there's 1 or 2 things they didn't know. Like, you know how when you got to the corners, you had to do certain things different than you had to do on the straightaways. People do that exact same thing with investing. That's why you develop a strategy and you work through it. Can everybody give me a high five, like a 5? We do a total wealth management process where first we look at your income, of how you bring in your income. And the second thing we do is we look at how you pay off your debt. It's a debt plan. If you read any of my books, I say do good, GOOD. That stands for get out of debt. If anybody here is from Zoe Church, you guys started the financial fast recently. We're walking you through it, and you're on pretty soon you'll be on day 9, 10, and 11. That's where we do that. Third, that's what we're here to talk about today. Stocks, there's part A and part B. Stocks, bonds, mutual funds, investments, retirement. All that's got to be in order and have a plan. That's A. B is real estate. For those who are not in California, you have to have a real estate plan. We did a real estate seminar last year, and Wayne, don't laugh. Don't laugh. You guys don't laugh. The guy that was on the class with us, when I sent it to him, he thought that when the prices of the homes, he thought they were phone numbers. 1-818, 1213. I'm like, bro, it's 1.2 million. It's 1.8 million. That's how high the price is. Okay. Paris, you laughed. Kevin laughed. Deborah laughed. I told y'all not to. Victoria's trying to hold it in, but you laughed. Told y'all that guy thought those were phone. All right, I laughed too. He thought they were phone numbers. Somebody say gotta have a plan. 4 is insurance and taxes. Next week, next investment lounge will be about taxes. You guys, there's certain things you got to learn about these things. And insurance, you got to protect your assets. If you guys are on mute, but say protect your assets. And then number 5 is having a living trust, where you walk through it and you have a living trust. And you go through a living trust is power of attorney, is a will, a living trust, powers of attorney, healthcare directives. So you have to have all of those. And we walk you through that. It's called the total wealth management process. But now I'm going to come right back to these investments. This is having an investment strategy where you sit down and you have something called small, medium, and large companies. And then you have something called growth. That means a company can grow at 20% per year, just using illustrations. That's an Apple, a Google, a Amazon. By the way, Google is killing it. They're doing very well because now they're doing that. So they're just a really good. So that's the growth companies. Then there's something called value companies. Those are dividend paying companies or been in business for decades, long records of increased earnings. That's a Costco, a Target, a Walmart, a Bank of America, Wells Fargo, like those companies. Now I'm telling you to buy these. I'm just saying, or healthcare companies. But those are dividends. And then you have medium-sized companies that are smaller, that's more like regional companies, like regional banks, different things like that. We have small companies. Those are growth ones. But right now, we look at how much we want to have in each one of those areas. And we want to develop one based on your risk profile and what your goals are to achieve your goal. Does that make sense? That's what we do. So do you see how when Miss Dyson said, I just hold on to what I have because she has everything in the right profile. Because what she can do is she's working on what she can control. Her budget, and you need to work on what you control. What can you control? Your budget, your debt, your investments, and yours. And then you find opportunities, and then when we invest in them. And then you know what we do? Achieve your God-given goal. The end. Okay. All right. So that's how we do that. All right. So now, hey, we done talked about 2023. But guess what we're going to talk about right now? 2024. All right. So first of all, so we'd say, hey, everybody. So I'm sure everyone wants to say to me, hey, what's the stock market going to do this? What's the stock market going to do this year? And what's the rate of return and all the things like that? And how's everything going? So I, first of all, would like to say our world famous thing that we do every year. What I do every year is this. I tell you something called headwinds and tailwinds, okay? So has anybody here flown on an airplane the last 40 or 50 years, or flown an airplane ever in their life? Just raise your hand. Okay, cool. All right. Now, raise your hand if you're just not going to raise your hand no matter what I ask you. Just raise your hand. Okay, all right. Let's see. Okay, cool. All right. Just you do. Hey, put your name down so I can talk about you because you know I'm going to do like write down the phone number. All right. All right. So you guys, let's talk about headwinds, okay? Do you remember what I said? Okay, so let's talk about the headwinds I talked about last year. What were the headwinds I talked about last year? I said inflation, interest rates. Oh, look at that. The balloons came. Interest rates. And then the third one I talked about, I said it was the war in Ukraine and Russia. But so now I've changed them a little bit, okay? So now number one is inflation. Because what happens if inflation heats up? You guys, the Federal Reserve will stop raising interest rates. I mean, lowering interest rates. They may raise them. So that would happen, right? Also, a recession. Like you guys know what a recession is. That means that we don't grow as fast as we thought we were going to grow. Okay. Now, I'm going to list all these, okay? Then I'm going to ask someone there. I'm going to ask your opinion on it, okay? Okay, so I'm going to see who I'm going to pick. I'm going to pick next, okay? So wait, then you guys just put your hands up. Gail, Vernell, Deborah, and Tamika, if you guys want to say something about these, let me know at the end, okay? Or Danette, let me know who else you'd like to have me, and then I'll have you, Danette, or anybody else want to comment, okay? We talked about inflation, right? Then also, I'm going to say, and then we're going to say geopolitical risk, geopolitical tensions. I'm going to say this. The reason why I say that is because it used to, what is that? That's the war in Ukraine, because that's really stalemating, because Russia is at a point, again, I don't know if they can just do it, but it's just, there's nothing really happening. It's the same way. Then you have what's happening in Israel, right? And the Gaza Strip. So you're having that. Then corporate earnings. You see the markets are going up. Can they earn the same way they are? Do you guys remember in 2020 when the pandemic hit, and then they had all those PPP loans, and they were just printing out money and giving it out to everybody? What was everybody doing? They were spending. People are like, I'm flying, just put a mask on. Then they're like, after a while, not even putting a mask on. People are going to Disneyland and Magic Mountain. You know what I mean? Like, people are traveling, right? They were just doing the thing. You guys are on planes, the planes were full. Planes are full, right? That was because of the stimulating the economy. Low interest rates and stimulating. Now they're sucking all the money out of the system, right? You're seeing that. So now can companies earn the exact same way? If I didn't say it, Fed policy. And then third is just new competition, and I'll go into that later on. Meaning this, people used to always just invest in the markets. Now interest rates are very high, so some people now are buying bonds. So we'll talk about how we do that. All right. So hey, before I pick on somebody, I'll ask Danette if she first want to do this. So what do you think about all these? And then I'll ask you. Okay. So now, does everybody see potential headwinds up here? All right. So, Vernell, we stopped you earlier. What do you think? What do you think about which one of these up here do you think is the biggest or would have the biggest impact on us? Or you?
The biggest, I think the Fed. Your boy Jerome Powell. I think the Fed does, because because his actions dictate almost everything else in here, with the exception of the geopolitical tensions. So what he does with the interest rates in terms of keeping them level or raising them, that automatically affects the market, which affects competition, which affects corporate earnings, which could affect the, which could create a recession. So I think overall, the Fed has been, for the past several years, the biggest impact, at least for me, from what I've seen, in terms of, because like I said, his decision making affects so many other different areas of our investment labs.
It does. See, you guys see how he just picked on me because he knows I like Jerome Powell. I'm sorry, everybody, real quick. Jerome Powell is the Federal Reserve Chair. Okay, just naming names. Have you guys ever heard these names? Just nod yet. Alan Greenspan, Janet Yellen. Okay, gotcha. Ben Bernanke. You ever heard this name before? Paul Volcker. Yeah, that'd be in the 80s. He was a lot. He was a minute ago. Volcker he's one of the people. So do you guys know that the US currency used to be up against a gold standard, and it's not now? So we can there's 3 amazing things the government can do. Number 1, print money. I didn't say gangster, but I usually say that, but I don't know, we record now, it's 2024. Printing money is also amazing. Could you guys imagine printing money like on a printer and using it? That's amazing. Number 2, these are all number 1s. Number 1 is this: taxing everybody. Could you imagine just going up and down your neighborhood, just collecting money from all your neighbors? When they get paid, income taxes, and then 3rd, when you buy stuff. That's pretty much. Then also 3rd, monetary policy. How much money banks can hold and how much things can hold. One real quick, I asked when I was doing a seminar, if you guys remember, a long time ago, when Barack Obama was in office, I said, who is the most powerful woman in the world? And you know what most Black women said? Michelle Obama. But you know who the real answer was? Janet Yellen. So the reason why I bring up Janet Yellen was, and then if you guys remember, I actually got to ask her a question at our previous program. You guys remember that? When I was asked to ask her a question, and doing that is Janet Yellen, because the Federal Reserve Chair can actually decides how much money banks pay in interest, how much is in your wallet, actually, how much you're paying on a car, a house, on all the different areas. That's actually a pretty powerful position in doing that. So that's good. Does anybody else have one? And then Danette, you can bounce. Danette, any comments you have on headwinds before we go to tailwinds? And I'll finish the comments on that.
I wonder, because I know we've been emailed this question before. When you say, someone asked before, when you say headwinds, what exactly does that mean?
Gotcha. So everyone, back to when I said when you fly in a plane, do you know that, like, where did I go last? Minnesota. So let's say that's a 3-hour flight. Headwinds, if you're flying in the headwinds, it may take 3 hours and 30 minutes, meaning that it's going to take you, headwinds are things that can slow you down from achieving your goals, from the markets doing well or from doing that. So back to my plane illustration, if it takes 3 hours and it's a 3-hour flight, but if you have a headwinds, meaning you're flying into the wind, it may take 3.5 hours. Flying home, it takes 3 hours. If you're flying with tailwinds, which I'm about to say next, it takes 2.5 hours to get there. So do you see what we're saying? Now, I'm not an engineer. My dad was an industrial engineer. So I think another term for a headwind would be resistance, something slowing you down from getting there. It's resistance pushing. And the other one is the opposite of resistance is actually something pushing you forward. So we don't stop. Now I'll tell you, I won't tell you, well, I should, about my daughter is different things, is that we don't stop with resistance. One time she was, we were playing basketball and she got hit in the head with a ball and she started crying. And I explained to her that we don't cry and quit. We cry and keep going. So we don't look at things that are headwinds and say we're not going to invest. We're just looking at how we adjust to those. All right. Is that answer that question today?
Yeah, because people make interesting decisions in these times, whether, people panic, I think, in certain time frames. So I just wanted to make sure you address that, what to
Gotcha.
do when those moments are in place. So that
Gotcha.
people know, Tamika talked about it, standing still sometimes,
But she's saying standing still, but she's keeping moving forward. She's still putting
yeah,
everything in and doing it.
let-
That's a great
letting it ride,
illustration.
letting it ride without pulling things out. Some people will just snatch and run. You know what I mean? So
Right. Right. Can I do one? Can I do one more? And then I want to hit the list and then go to tailwinds. Is this? There are people that stopped looking for real estate when the interest rates went high. You should still, oh my goodness, you should still look just as hard. Because if you wait for real estate interest rates, so let's say the Fed cuts interest rates right back down to 3%, then the house will rise and you'll have to fight against the same people. You know what I mean? Like, I'm trying to, what's the word other than having the herd mentality? Like, you can't do, okay, one more, you guys know I'm a pastor. Is that you guys know when I pull into a parking lot and they keep saying go right, go right, go right, and they're trying to fill you all in? I just go left and then just park. Because everyone else is following everybody. Don't everybody do that, because then I won't have a parking spot. Just kidding. But what I'm saying is that, like, you can't do whatever you have to start thinking and looking at opportunities instead of just like, just always, just doing. You have to do something. Do something uncomfortable. All right. And that's how you get ahead. All right. So inflation, we already talked about that. So I just want to make sure I hit everything. Inflation, if inflation comes back, that's a problem. But then I'm gonna do Fed policy. Like, we covered all these with Fed policy. New competition, I already said that. That's dealing within the area that now people invest in different areas than they did before. Recession is we seem to be coming in for a smooth landing, so we're not, that's the thing. Corporate earnings, that corporations see if they're going to still have earnings like they are right now at current interest rates, if companies can earn the way they were earning. So does everybody understand that? Let me use Amazon. Paris, let me use Amazon for a second. Y'all know during the pandemic that there were 2 Amazon trucks on your street. Anybody ever seen 2 Amazon trucks on your street, like at the same time? Them and Apple were killing it during the pandemic. Can they still earn money like they did back then? That's the question. You see? All right. Geopolitical tensions, everyone, that's an area of prayer. As you know, we've been praying about that for Russia, Ukraine, what's going on in Israel, just all these areas. It's just, and then China, just all over the world. There's just things happening. So we pray for those. All right. Now, those are headwinds, and those are things we also change when we look at how we're going to invest. All right. Now, tailwinds. So tailwinds are what's some things that can happen this year that's going to make us just do really, really well. So without no further ado, you should kind of know what one of them is I should have wrote down the Federal Reserve, but certain things that would happen, but I'm just saying, number one is if inflation doesn't go up the way that it was before. And then the Fed, I'm sorry, so I'll put these. So I put it up in there. Hell no. Okay, guys, the Fed, okay? And so we will not cover that one first. And then you guys know that people are very excited about AI. I went to a meeting, I was in Atlanta, I was in a meeting, and we're working on a statement and everything. Let's ask AI what they say. Let's do that. And then all things are going on in China, and then stabilizing in China, and then also higher profits, okay? So I asked Vernell, let's come back and then let's ask Deborah. I'm gonna do Deborah and then Tamika. Oh wait, and then Gail, I'm not gonna forget about you. Of all of these, which one do you see is having the biggest effect for you? Do you need to see it again, or does everybody saw it? All right, who wants to go first? Gail, you want to go first because Danette thinks you look really nice today.
Thank you very much, Danette. I appreciate that. I'm going to say decrease in inflation, because that's going to directly affect everything that I do, everything we do in our family. I mean, it's going to affect prices at the grocery store. Overall, that's probably the best. That's the tailwind that's likely to occur in 2024. AI to me is a question mark, because I think it's going to affect jobs, and it's going to affect jobs.
Gotcha.
Not sure how. But go ahead.
Gotcha. Can and I'm not trying to cut you off. I just want to do you guys, first of all, can everybody give I'm going to do it at the end too. Aren't these questions? I love this lounge, these questions. I mean, the way you guys come up with these answers, the way you look at things, it's like, don't you guys think these guys are professional? I'm saying it one more time. Gail is not a paid actress. We did not call her to come up and say these things. But so do you see how I'm talking about the Federal Reserve? And you see how inflation is? Because see, inflation is, so just real quick, I'm going to define inflation for you guys. It is supply and demand. So when you have a lot of dollars and a limited supply, it drives up prices. So you see that we had a lot of dollars, remember during the pandemic when they did the PPP, and it drove up prices. And then it made the dollar less value. So then it makes you have less money. When inflation goes down, then you have more purchasing. Does everybody understand that? So you can get more. So I guess, Julianne, we always use food, don't we? So anyway, if you go to the grocery store, you can fill up the bag for $50. You don't walk in and get 2 things and then that's it. But also, do you guys understand that when you go on a family vacation or you go somewhere, you can buy a lot more things. Okay. So in doing that, so I really like how that works. So you're saying inflation, which is great, and that's what they're watching and everything like that in that area. All right, I can't remember who I said was next. Was it Deborah?
Okay. Yeah, I agree with inflation, but I also think higher profits will highly affect the economy, because if we're making more money, then we're able to invest more. We feel more confident when we have higher profits. So I think that's a really great tailwind.
Right, and that's good. That, and so what also that was we spoke about earlier when Burnell and I were talking. There's something called consumer sentiment. That's how people feel. So when you go out, if you feel like everything's okay, in America, you just gonna go out and spend. So if you feel like everything's fine, you almost believe what the social media people are saying. You know what I mean? Like those people just just wow, in that area. And so that's good. Tamika, did you have one that you thought?
I could quickly add, I echo what Gail and Deborah just shared. But I think the most out of everything is something that is it just depends on what side you're on, is AI. That could be scary. And there's a group of people who are very excited for AI. And for myself, I feel like how you see AI, which is very, very new out of everything that you have listed there, it can really drive um, the other bullet points under tailwinds. So, for example, like Gail mentioned, jobs. It just depends on where you're at. I'm in education, so I feel like it's almost like Switzerland. It could be very profitable, but it also can be quite. I don't want to. I don't want to say the word fearful, but because I feel like if you're thinking it's fearful, it's because it's unknown, right? So I feel like how AI is how it's navigating right now and in the future is going to drive everything. So that it is going to cut some jobs, it is going to build some new jobs, and it is also going to, tie into everything. So that's the only thing I would like to share amongst with Deborah and Gail.
Okay, gotcha. So hey, we're gonna have Burnell go next, and then I want to talk to you about certain things we're doing in Forecast 2024 a little bit more, but also about AI. I just want to say this, that a lot of this is in its infancy stages. So you're watching how this went from when they had electricity. You know what I mean? Like then you see I'm gonna use the word electric or hybrid cars. So you're seeing the different iterations of this. So you're seeing all these things in these areas. So then later on, we're going to swing this into how this affects us in investing wise. And then I'd like to go over that a little bit. And then I'm going to pull up a separate slide, Julianne, as well, a separate slide. Vernell.
I just wanted to add quickly, we understand that, you know, higher profits might seem as if it's a benefit because the assumption is that if companies make more money, that employees are going to make more money. But that's not, that's not true necessarily. And and that really depends on truthfully what happens with inflation, because what we're seeing now is because inflation is so high, companies are actually laying off people or doing reduction in forces. So people are actually losing their jobs because the inflation is so high that they can't maintain or hit their profit margin goals. So as a result, they're having to lay off people. So just because profits are increased, it doesn't necessarily mean that more money is going to come to the employees. It may just mean they're going to get back to their profit targets, their profit margins that they wanted to get to before. So I think it behooves us as investors to not quote unquote bank on corporate profits, but to continue to invest wisely the money that we are earning so that we can make our money, work for us, so that regardless of what the, corporations and our employers are doing, we still have a plan in place that we're pursuing faithfully, regardless of what what the leadership does in these individual corporations in regards to those higher profits, because we don't know how they're going to use that increased money. And so we have to just be mindful of that as we move forward.
Gotcha. Hey, so everyone, I think everyone knows, and I've done calls on this before and whole summers. When corporations make more profits, they have and also when they're saying corporate profits, at least on these calls, we're talking about that increases their stock value, because there's three things they can do when they make more money. When a corporation makes more money, and then you guys, you'll see all these things. The first thing that they can do is buy back their own company stock. Second thing they can do is give out more dividends to shareholders. Third is they can just use that money. You know what I mean? Like buy other companies, just they can use that money, which you saw them do. Now, we're not going down the rabbit hole of different things, because we saw how like Walmart, different things bought the Broncos, and then like how they handle things. But you're right, as far as giving them out. But corporations have to pay a lot more to people, because right now there's unemployment is very, very low. So that's why that's also one of the reasons. So what we want to do is look at how when they do company and why they do corporate earnings. Hey guys, we want to kind of come in and just kind of talk to you a little bit about how 2024, okay? So a couple of things. So we saw how companies those are the headwinds, tailwinds, are just coming in to 2024. We're looking at how corporations are going to have earnings and different things, and how they're going to come in and what we think they're going to do. So this is actually here. Just want to show you a little bit about, because we brought up job market. I just want to show this real fast. Do you guys see how that you guys are seeing that on the job market is that you're seeing right now, that you see that excess savings? You see how these are going down, and then changes in household debt. Do you guys see how like a lot of these numbers that you're starting to see are actually pretty high? So what they're going to do is they're going to start having people. So we're kind of looking at the job market a little bit and how things are working in that area, in this area. So this is actually telling you where they think, these were all the different broker dealers and all the different investment managers are looking at where they think the S&P 500 is going to be toward the end of the year. And just to let you know one thing, and why I just popped that up and put it right back down, is this reason. They're wrong 100% of the time. Like in the thing, these are all predictions on what they think the markets are going to do. But the only trend is it looks like it appears it's going to be higher. And the reason why is because more people consume more things. So I'd like to just explain to you that it's not the best investment you can do is when you're doing these investments is actually having a very disciplined portfolio a portfolio and then sticking with it. So I just like to show this to you. And then I want to comment on what our next steps are. You see the value of just being disciplined is that you see that when you invest over a 1-year period, they had 69 positive periods and 25 negative periods. Then we look at stuff over a 3-year period. You see the 77 positive, 15 negative. You see where the 5-year is 79 and 11, but over a 10-year period, you see that 80 and that 5. That means 94% of the time. 73 compared to 73 for a 1 year. Does everybody kind of see that? That's the advantage of being disciplined over a period of time. All right. And hey, next steps for you. People who are clients. So remember, we want to have a portfolio. Remember I told you about bonds, short, medium, long-term bonds, also real estate, what we're going to do, and then small, medium, and large companies, growth, value, is that we want to design an exact portfolio for you. So first, I'd like to speak to all clients. All clients, you have a portfolio that is specifically designed for you, that takes in your risk tolerance and your goals and how you want to achieve them. There are some slight adjustments that we're more than likely going to make to your portfolios based on certain things that we talked about today, right? So these have already been made or being made, right? Is that number one is that there are dividend paying companies just done well over time. We have to decide if we want to own more or less of that. Number two, and it's just general, okay? Number two is growth. There are growth companies that may be discounted or that we want to find that we do, or there may be an opportunity. Third, what we're doing with interest rates and bonds, because if interest rates were going up, that means bond prices were going down. Now they're stabilized. So we were buying short-term, it's good to own more shorter-term bonds. Hey, do we need to go longer now? Or how we need to develop a very specific bond strategy. And then be very diversified and have the right portfolio. So everybody that is not a client, you need to, one, have your portfolio looked at and say, will this portfolio help me achieve my goals? Am I taking on the proper amount of risk? And how much do I need to put in so I can retire based on all the things that are going on, right? You know what I mean? What's going on with all of the headwinds and what are the tailwinds? And am I utilizing all the opportunities that are before me? So I'm going to give you, Julian, our team's going to put in the chat. You can go to georgebthompson.com. They're going to pull that up in a minute. And you guys you can click on, there's a button called Work with George. I'll take you there in a minute. But I just wanted to make sure we have the steps and the actions you should take. First of all, clients, keep us informed if you have any life changes. If you, I don't know, get married, if something's happening, different things like this, let us know. Job, change things, and then tell us what your concerns are investment-wise. And then also, we say this every meeting. Can we make sure all your documents are up to date? Now I'm talking to you as a pastor again. People have living trust they haven't updated. Have you updated that or do you have that? Okay. And then make sure you send that to us or let us know that if you don't have these things, we'll do it. All clients, you already have another appointment, and I want to make sure you can do that. All right. And then Crystal, she may be still on or not. Next time we're doing the investment lounge, it's going to be on tax strategies. And in these areas, hold on, let me take this down real fast. I'll pop it back up. Hey guys, how was this format? Did you guys like this format where we talked and we did this? Okay, all right. All right. So we're going to be doing tax strategies, okay? So make sure you sign up. And then also, you may know a friend that want to do this. There's certain things that you can do to save. There's a lot of, I would say there's a lot of tax loopholes that aren't actually now. But we want to be able to talk to you about different things you can do in that area. I'm gonna give you one, okay, now, because this has nothing to, do you see how you're getting it from a financial person? Is that I've done told everybody, my hand is raised, everyone, my hand's raised, everybody see my hand raised. During Christmas, remember I told people don't buy Christmas presents and toys for these kids. Buy them stock. You remember that? So you understand about gifting stock, and that's a tax strategy, okay? Do you understand? I'm going to change that to it. Does everybody know I'm going to change that to a tax strategy, right? Because then you're going to gift that to them, right? So we're just going to just talk about that. All right, and then sign up. And then Danette, anything else you want to add about that, or anything else I should say about that, Danette?
No, you said it all. We're gonna update our you'll get an email and a thank you, and you'll be able to register for that tax planning strategies, and hopefully our new, speaking of AI and automation, I hope our new automated system, even with the foibles that we're having, is helpful with the reminders and the text messages. And sometimes there's some little things where people point out, hey, that didn't work. So we fix it. It's all new to us too. So thank you for being patient with us and giving us grace where those errors pop up. But I'm looking forward to the next session.
Cool. All right. Just want to make sure I hit it. I'm making sure I hit everything. All right. And you guys, is anybody doing the financial fast? Oh, okay, gotcha. You guys will be doing the financial fast. Again, you or your church may be doing the financial fast. You guys can just go to George B. I'm going to put up the website in a minute, georgebthompson.com, and you guys can do the financial fast where you get a book, an ebook, and then every day I send you a message of every day of 21 days of the fast. And then also the people who want to work with us, you go to georgebthompson.com, you click on this work with George button right here. And then the where's George says where I'm at and everything like that. All right. And then let me know. There you go, georgebthompson.com. All right. So those are my slides. Okay. All right, everybody, I want to thank all of you for coming. And then again, I said it during the talk, but we want to make sure everyone has a high five. Do you remember that? The income plan, the debt plan, the investment plan, the taxes and insurance. Here comes the balloon. See, that we celebrate because you're getting the taxes and the insurance, and then fifth, the estate plan. It's called a total wealth management plan. Okay. So if you have questions about that, you guys can go to Work with George, or you can send us an email. Julianne, sorry, team, if you guys are putting in the chat our email and that. If you could just, you guys can go to georgebthompson.com, click on Work with George to do that. And we'll make, and then we can get your plan together. All right, real quick feedback before we close and we're done is this. You guys like this format? Investment Lounge? So let me just tell you why I like it. I like it because it's very interactive, and we can drive more the way you want to go. Like now that, okay, now y'all talked about inflation is now that when I travel, do you see how we talked about that today? I didn't have that read, but I have that. But you guys know when I travel, I take pictures of those gas stations, and people are always like, "Why are you taking a picture of it?" Like when I'm standing at them gas stations, I just for LA people, just have you guys ever seen gas at 289? You're like, I'm gonna bring this back on the plane, but them TSA people are like, no. I'm like, all right, because 3 ounces isn't gonna do anything. So there you have it. But everybody, format, anything about format, thumbs up. What do you guys think? Different things like that. But I like the interactiveness. If you guys can shoot us a little, you can type in the chat one, and then we just want to get your feedback. So, hey, Danette, maybe we might send out a little survey or something later on in that. And because we get questions during the, whenever I do these seminars, and later on I get questions and stuff like that. So we can do it. All right. So that's all I have, you guys. So I'll stick around for maybe 2 more minutes, and do anybody have any questions? If not, I will see you later. Okay.